There's a very famous saying, two things in life are certain, death and taxes. You can't plan for the former, but you can certainly ensure that your taxes are in order. At the very least, you can make sure that you're not making any mistakes. And at best, a few tips and tricks could keep more money in your pocket. This is Moneywise on NDTV Profit, and I'm Alex Matthew. On today's episode, we'll cover the entire gamut of taxes, not just for the salaried individual, but for the senior citizen and for the professional as well. Joining me is CA Nitish Buddhadev. Thank you so much, Nitish, for taking the time. Absolute pleasure.
Thanks for having me, Alex. Always a pleasure.
So I'm hoping that this is going to be a show that answers all questions that somebody might have. But let's start with the common mistakes that you have witnessed and that are more relevant now with all the changes that have come through.
First of all, I quite agree with what you said, that I can't do anything about the death, but you can surely plan your taxes.
Yes.
And we should be doing that. So the first mistake, what I observed around the tax planning, people misunderstood the tax filing as tax planning. See, tax filing is most of your post-mortem. You can't do anything in the July.
You stuck with the death analogy.
Yeah, of course, right? Because because you can't do anything in the month of July when you want to file return.
Right.
It's as good as postmortem, right? So planning happens during the year, at the start of the year, and during the year, right? Like selecting your regime. If I'm selecting a proper regime, I can save a lot of taxes. Like planning your capital gain, how you want to pay your taxes, or don't want to pay taxes, and what you can do. That's the planning angle. I can't do anything after I sold the asset if I don't know how I can structure that. That is on the planning side, Alex. But at the compliance side, I've seen that people are paying too much of penal interest because they don't know about the advance tax.
Okay.
Most of the seller feel that advance tax is not applicable to them. But if your tax liability, after taking care of TDS and all, it's still 10,000 and more, you have to pay advance tax.
And so this relates to any asset that you sell over and above, something that comes into your other income, right?
Perfect. So let's say people might...
Or income from other sources, apologies.
People might have more than one income, which is nowadays quite common. Either you are selling your mutual funds, you are dealing into shares, you have a dividend. On all this, Alex, you have to offer tax. And nobody is going to deduct the TDS because your mutual fund is not going to deduct the TDS. If you are selling some shares, you have to analyze what is your capital gain and you have to offer advance tax on that. If I'm not doing quarterly or whenever there is an incidence of advance tax, I need to pay penal interest when you file return.
So let's clarify a few points here so that everyone knows what they're doing, because so many people investing in mutual funds, buying and selling on a regular basis. If your profit or your capital gain in any given year is more than 10,000 rupees from sale of any asset, right? And that includes fixed income mutual funds. You can make capital gains apart from interest income.
Right.
You can make capital gains from equity mutual fund, balanced advantage fund, what have you, from an equity investment and from a real estate as well.
Right.
Right?
So Alex, once my...
And gold.
Of course. How you can forget that, right? So if the total tax liability, what I need to see is total tax liability is more than 10,000 from all the assets you have mentioned.
Oh, the
I need
liability,
to see
not the capital gains.
Not the gain. So for example, 1,25,000 of gain is exempt if you are in the mutual funds or equity, right?
Yeah.
Then you don't need to, of course, pay the taxes, and there is no question of advance tax.
Right.
But I'm receiving some dividend. I'm receiving bank interest. Bank is only deducting 10% in the TDS. But if I'm in the 30% tax slab, I need to offer another 20% as an advance tax. That people are not aware. Because they are considering bank has deducted the TDS, my job is done. No, it's not like that. So advance tax is one aspect where people are, I would say that they don't know, and that's why they are missing on the compliances. At the same time, I observe that people are not aware about the AIS and TIS. This is like your snapshot of whole year.
What does that stand for?
Okay. Annual information statement, and TIS stand for tax information summary. Okay. So what it means is that, Alex, during the whole year, you have purchased mutual funds, sold equity shares, you have got a salary, you have got a saving bank interest, everything practically. Let's say you have spent on foreign exchange, or you have traveled abroad, or you have bought a car, and you have paid a TCS. Everything what Alex has done or anyone has done in the financial year, government is capturing all the data and they're giving you in form of AIS and TIS. So what I need to do, I need to reconcile this figure if there is any discrepancy or not, or if I'm missing out on something which I'm not reporting, then there can be tomorrow scrutiny because I have not disclosed something. So I need to correlate all the incomes. and all the deduction with that.
Which is the more important document, or is there no such thing? Both are equally important.
Both are equally important. TIS, as I mentioned, it's a kind of a summary of all this, but
Of what you paid.
of what the TDS, TCS, and not only that, whatever income I have generated, it can be as simple as that my saving account interest or FD interest.
Right.
That's also captured that, but it's kind of a summary, as
When
the name
is it
suggests.
available?
It's on your income tax portal. You have to log into your income tax, and you can extract this document like AIS and TIS
At any point?
at any point. But still, for this financial year, it's not yet updated completely.
That's what I was
so
wondering,
you might need to access it in the month of June and July when you are filing and you are close to filing your return. But one must check data with this. AIS is like quite comprehensive. Everything, even if you have sold a particular share on a particular date, everything is captured.
And even your transactions, I would think your large transactions for sure.
Everything. You're buying immovable properties, you are selling it, you are, as I told you, if you are buying a car, the TCS has been deducted. So all these things is captured meticulously.
And so you've been studying this, of course. It's been operational for 3 years,
3 years,
now.
right.
And they've been trying, as I understand it, to close the loopholes over the course of the last 3 years. So I think anecdotal evidence of a lot of people getting tax notices for earlier financial years as well, assessment years as well. Is that related to the kind of scrutiny and information that the tax department is now gathering?
Right, Alex. So if I'm claiming that I have not done something, or I'm not showing something in my income tax return, but it's always there. So for example, I'll give you one simple example which we have observed in few of our clients. Let's say a client is paying rent of X amount, okay? But they are showing double of what rent I have paid. So for example, let's say an employee is showing that I'm paying 80,000 as a rent.
Yeah.
But in actually he's paying only 40,000.
Oh.
He's just extra claiming that. But now what will happen? In landlord's account, that will shown as 80,000 of rent received and not 40,000.
Right.
But that's the mistake on the side of that employee or that tenant, because they want to show higher rent at the office.
But don't you need a rental agreement and all of that for?
People are making the fake copies and all that thing to show that, right? Now the problem, now at the landlord level, he has to show, no, this is wrong information. I have only received 40,000. So sometime you go to AIS and you need to course correct that. Now what will happen? That employee who is showing 80,000 will get a notice that you were claiming a fake HRA. So that's quite foolproof, like you rightly said. They are doing it so comprehensive. I think it's all the tax loophole are getting shut now.
So, okay, so a couple of these aspects, you spoke about HRA. There's also the question about TDS from HRA that, not HRA, but the rent that is paid, where there's a bit of a confusion. Can you clear the air?
Sure, Alex, and that's one of the, I think most people are not aware that compliance is that if you are staying on a rent, okay, forget about the HRA. Even if you're staying on a rent and if you are not claiming HRA, if your rent is more than 50,000, you have to deduct 2% of TDS out of that at the end of the financial year or at the end of your staying tenure.
So I have a clarification that I need to ask here. So often you have couples that are living and contributing to rent together, right? And in places like Mumbai, rent going above 50,000 is pretty par for the course.
True.
It's normal. But having said that, they contribute equally. They contribute, if you're talking about 55,000 or 56,000, you're talking about half and half that is done, right? So in that case, do you still have to deduct the TDS?
Right. What you need to see that how much you are in total paying to landlord.
One pan,
right? So for example, you are the landlord, and if me and my wife are paying 30,000 each, I still need to deduct the TDS because I'm paying Alex 60,000 per month.
Right.
To be simplified.
Right.
So that's the provision which people are not aware. So if I'm not deducting this TDS, that's a non-compliance.
Right.
And your whole HRA can get disallowed, and you might have to pay penal interest because you supposed to deduct the TDS and pay to the government. But people are not aware because people think that if my TDS has been deducted from my salary, my job is done. No.
Okay, so and in this case, just to close the loop on this rent conversation, when you do go to the income tax portal, and you said that you should do it at some point during the year, perhaps before the end of the financial year, right? So when you do this, under what head do you go and pay the TDS?
Right, Alex. So there is a particular section number under which I need to deposit this TDS. I need to go to the portal. I need to deduct the TDS. I need to show whatever rent I have paid during the year. Only once, not every month I need to deduct. Only once I deduct at the end of financial year. Let's say from April to March, whatever total rent I have paid to you, I'll do a total. I'll deduct the 2% TDS, which was, by the way, 5% before October. The rate is just revised, which is 2% that you deduct and pay to the government. You get a certificate that you need to give to your landlord. Just give me credit of this because on behalf of you, I paid this TDS and I should get credit of that. So this is the process.
Okay, so you've clarified quite a bit. One of the confusions that still exist, and I get questions about this practically every other day, Nitish, it has to do with the old and the new tax regime. Because so much has changed in the new tax regime, I know it's a no-brainer for most people that the new tax regime should be the default because it's so advantageous right now. But why don't you just now completely settle this discussion and say which is better?
I agree with you, Alex. For 80% of the people, the new regime is no-brainer. But why we should not spend just 60 seconds to cross-check new or old? And there is a powerful tool which we have made that you can do your analysis that which regime is beneficial for you at your particular level.
You've done this calculation,
yes,
right?
This is a break-even analysis we call, and we do it every budget after the budget is announced and the slab has changed, right? So for this year, as we speak, if your salary is, let's say, 15 lakh, you roughly need 6 lakh rupees of deduction and exemption to break even. When I say break even, at this level of deduction and at this level of salary, tax payable under old and new is same.
Okay. So
which
you need
means
to have more deductions. Right.
And at the 20 lakh, this 6 lakh goes to 7.5. Okay. The deduction and allowances you need to break even. And the last but not the least, 24 lakh and above, you need 8.5 lakh rupees of deduction and exemption to break even. Again, which means that if you have a more deduction than 8.5 lakh, it's better to be with old or otherwise new. It's as simple as that.
Okay. Now, here's the deal, right? I want to talk about this 8.5 lakh. Because
how to get that?
How do you get there? Because let me enumerate it and tell me if I've made any mistakes here. 1.5 lakh ADC, 50,000 ADC CD, another 25,000 ATD. Is that
25 to 75 based on if you are paying
for your parents as well,
also,
right? So, but let's take 25,000 rupees. That's fair, right? So that's 2,25,000. Add another 2 lakh for Section 24, interest for home loan. Another, say, 2 lakh for HRA. You can claim both, right?
You can claim both, provided there are some conditions.
But you're still not at 8.5.
Right.
There are a lot of people that are claiming donations to political parties, and let's be honest here, not necessarily rightfully claiming it.
True.
Is this a dangerous thing to do, especially when there is increased scrutiny now by the tax department?
Right. So, Alex, I'm coming to your first question, which is how to get to that 8.5 lakh rupees, right? As I told you, for 80% of the clients we have seen, or 80% of the people we have seen their income tax and whatever they claim, for them, new regime is the best. But why not to do this exercise? Why I'm saying that and how to get that 8.5 lakh rupees? Let's say your HRA, roundabout, if you are paying, let's say 60, 70,000 rent, okay, easily it would be in the range of 40,000 by that HRA calculation. Your HRA, ATC, ATD, LTA, your flexi pay benefits, if you have food coupons and all that to claim. Some of the org offer, let's say, car lease, then you have a normal ATG. And that's why I'm saying at individual level you need to do. And again, it might be possible at one of the spouse, if both are earning, one can go for old, the other can go for new.
Oh, so only you concentrate all your deductions with one person.
Like,
okay.
If me and my wife both are earning, I will claim most of the deduction, like my HRA and all the things. I will pay, let's say, health insurance premium. I'll pay term insurance premium.
That's an interesting strategy.
That's what we need to analyze, and that's why I'm saying, maybe it's only for 20%, but why not to do this exercise? Because even if you are going for a new, you at least have a conviction that I chose a right regime.
Okay. So, and to the second point, which is
the coming to, and
donations.
That's a very, very, very valid point and important point. In last 6 months, almost all the people who have claimed political donation got the reminder or a nudge from income tax. I would not call it a notice. What that reminder is saying, in case if you have claimed wrongly this political donation, you can file the revised return.
Which so means giving an opportunity to fix it.
Yes, and that revised return, because most of the revised return deadline is over. So what they are saying, if you have claimed it fake, okay, let me be very open and say, if you have claimed it fake, pay the penalty, do the revised return, and get it done. It is kind of a nudge that they might come behind you because they are giving opportunity. And let me tell you, most of these things are just adjustment people are doing when it comes to a political donation. That's what we have seen. Okay, so if somebody has done, they must come out clean, or must not do now henceforth, because government is, I would say, watching it very, very, very carefully.
I've heard about this. Okay, so and let's not spend too much time about this, because ultimately people know what they're doing. But I do want to talk about the way that people are doing this, in that there is a situation where they're making a legitimate donation. That person is taking a cut and paying a certain amount of money back. So this is what people are doing. I guess there are ways to track that as well now, I would think, right?
That can be tracked. And there are many political parties who are not qualified to take the donation.
Right.
That's another issue. And not only that, people are just doing a Photoshop of the receipt and claiming. They're definitely going to get caught.
Be very, very, very careful is the message that I'm sure that you want to send out.
That's it.
Now, we've discussed several aspects already. When it comes to professionals, already, and I feel like they've got a huge advantage. Some of that advantage has gotten close, Nitish. Let's face it, with this new tax regime, salaried individuals finally saying, okay, government is listening to us, giving us a bit of a break. Because you say 50% already from largely for a professional, they can claim it in expenses, right? So there's a significant advantage. From their perspective, what regime works for them?
I would say here, for 95% of the professional, new regime is better.
Okay.
Why? Because I as a professional, if I'm filing my return as a professional business owner, right? I don't have a HRA to claim. Okay. So the main deduction is not available. I don't have a flexi pay. So for me to get to 8.5 lakh rupees of deduction is quite impossible.
Yeah.
Let me be very clear. Okay. So that's what I'm saying. For more professional, it's again quite important to select the right regime. Why? Because as a professional, I can switch my regime only twice in a lifetime. You being a salaried can do it every other year.
Hey, we need to have some advantages, Nitish.
No complaint on that, but I'm just making a point. Being a salaried, they can choose regime every year.
Yeah.
But as a professional, I can choose only twice. I can go to old and come back to new if I want.
And then you
only
can't
twice
change
in a
again.
lifetime. Then I can't do that. And that's why I need to be very much sure which regime I want to stick to. And altogether, like you mentioned about that, if some professional who are called specified professional under section 44 ADA, they can pay taxes only on 50% of income, and 50% expenses they can show as, let's say, expenses.
But are there restrictions there?
Yeah, there are a specified professional, as I mentioned, accounting professional, lawyer, doctor, you have your interior designer, technical consultant, movies artist, and the director and all that thing. So practically for them, up to 24 lakh rupees of income, they pay zero tax.
Okay.
Why? Because on 24 lakh rupees of income, 50% I can claim as an expenses, and 50% I have to show as income, which is a presumptive taxation, right? So practically at 24 lakh rupees of income, after the presumptive taxation, my income is 12 lakh. And
Which
up to 12 lakh, there is
regime,
no
right?
tax. So 24 lakh rupees of income, no tax. But if your income crosses 20 lakh, you need to have a GST.
Okay.
So that's the compliance one needs to follow.
Okay.
And this benefit is available up to 75 lakh rupees of income.
So, but GST, you need to have a GSTIN number?
Of course, because if I'm a professional and if I'm rendering a service, and once my total billables crosses 20 lakh, I need to have a GST.
Okay. Okay. So, but how does that work? There is a, you have to show that you've paid a certain amount of tax, that people that are rent or taking advantage of your service have paid certain tax. Is that
because
how it works?
let's say I'm raising an invoice.
Right.
Month after month.
Yeah.
And once that crosses 20 lakh, I have to compulsory go and opt. If I'm not opting, then GST will send a notice to me. Because ultimately it is getting captured in my data. I'm receiving that professional fees in my bank account, right? And they have the record that I have received 24 lakh rupees of fees.
Understood.
If I'm not taking a GST registration, then I'm liable to do that.
Okay, so this is from the professional standpoint. When it comes to senior citizens, now a lot of people have benefited from the change that has taken place in the slabs, but there are more changes that have made things a little easier this year onwards, just so that everyone knows and understands how good things are. What are the major changes?
So the first change on the senior citizen front, that up to 1 lakh rupees of interest income, now there is no TDS. So it's more on the kind of, I would say, more take home or in hand income, because they don't need to go with the TDS and all that compliances. But what majority people are not aware is that they can submit the form 15H, though they are aware, but what they are not aware, that up to 12 lakh rupees of interest income, and I'm considering that they don't have any other taxable income, and that's main income is interest income, then up to 12 lakh rupees, the TDS would not be deducted if they submit the form 15H. Many people have a misconception, it's only available up to 4 lakh
rupees,
which is exempt income. No, but when you are doing this calculation, you have to see that if there is no tax payable due to rebate also, because no tax payable up to 4 lakh, but with rebate it's not up to 12 lakh rupees, right? So if senior citizen don't have any other income and net taxable income is less than 12 lakh rupees, they don't need to go into the TDS and all that thing, just submit the form 15H. If they are of course going for old regime LX, then they don't have any tax payable up to 50,000, no tax. Forget about the TDS, no tax on 50,000 of interest income, that is under section 80 TTB.
Right.
Okay, that's the benefit. And apart from that, pretty much everything else like slab rate and everything is same for them.
So for a lot of senior citizens, it would make sense to use a new tax regime, basically.
True.
I want to also talk about one leg of taxes, and you briefly talked about it when you spoke about advanced taxes, but capital gains tax. A lot of people contemplate how do I reduce the tax incidence. One way is to have tax harvesting, which they talk about, use this 1.25 lakhs on an ongoing basis. I don't know how useful it is over the very long term, because holding, I guess, and then selling and then deploying again becomes a little bit of a challenge. A booking of capital losses also is another way to do it.
True.
But I want to understand from you, tax saving investments after selling of capital or booking of capital gains, there is the tax saving bond. Is it useful?
Thanks for asking me this, Alex. I've been advocating that never go for this 54EC bond.
Okay.
So I'll just clarify what is the section, that if I have up to 50 lakh rupees of a gain, or maximum 50 lakh rupees, I can invest in this 54EC bond, which I can buy of any REC and NHAI. Okay. And up to 50 lakh, I can buy this bond if I don't want to pay capital gain. Let's say my capital gain is 70 lakh, 80 lakh or 50 lakh. I will buy this bond and I don't need to pay any capital gain. And the capital gain right now on most of the asset is 12.5%.
Right.
Now, this bond comes with a 5 years lock-in, only offer 5.25 interest rate, and that is taxable.
Oh.
So if I have to tell you the exact post-tax return for someone who is in 30% tax bracket, it is 3.67% net return. Now somebody would argue that, hey Nitish, but I am getting an upfront 12.5% tax saving, which is around 6,25,000.
Yeah.
Okay, let's add that. 6,25,000 of upfront tax saving. Why? Because I'm not paying 12.5% tax on 50 lakh. That's your 6,25,000. Now, by investing this 50 lakh, you will get 3.67 net return after taxation, which is total altogether is roughly 15,25,000. And now it's
over 5 years.
Over 5 years. It seems quite huge. But let me give you a simple analogy. If I'm investing this in, let's say, a kind of a hybrid mutual fund, because anyway I want to stay invested for 5 years, this is under lock-in, right?
Yeah.
If I get a 10% CAGR return also, my gain after taxation would be 25 to 30 lakh rupees. So it's no-brainer that please don't go for 54EC, and at least analyze that it makes sense for you or not.
Yeah. So the opportunity cost is very significant. And so therefore, bear that in mind. Any other tax saving options available to you? Buying another house.
Buying another house, right?
Yeah?
But another aspect people are not aware, that's about that if you are selling a house, which is a long-term capital asset, I can buy another house and not pay any tax. The other aspect which many people are not aware, which I would recommend people to use it if that makes sense for them, which is on any long-term capital gain, you can pay a zero tax if I want to buy a house.
For
example, I'm selling...
First house
it
or any
can be
house?
a second house also.
Okay.
So to utilize this section, you can't have more than one house in your name. Okay. So with this section, you can buy another house. If one house is already in your name, you can buy another house. And how this works? Let's say I'm selling my ESOP. Let's say I'm selling my mutual funds.
Or
any
shares.
kind of long-term equity shares, gold, anything other than the house, because house is covered in 54.
Sure.
This is section 54F.
Okay.
But here the catch, a bit catch, is that you have to invest the net proceeds. When I say net proceeds, the whole amount you are receiving as a redemption. In the 54, you just need to invest the capital gain. In this, you have to invest the whole net proceeds. So for example, if I'm selling a mutual fund worth rupees 1 crore and there is a gain of 20 lakh,
right,
I need to invest whole 1 crore in buying another property, then I will not pay any tax. So
Fantastic.
that's there. And like you rightly mentioned, you can set off your losses. Most people are not aware that you can even set off your losses with other assets. So let's say if I'm selling right now gold, okay, and I'm moving to equity, and I have a profit in gold, I can set it off against the equity also. So
Fantastic.
cross asset set off is also possible to minimize your tax liability.
So there's so much that we can talk about. Hopefully we've given people a head start in managing their taxes, as we talked about at the start. You can plan it, and it's good to do. Thanks so much for joining me on this episode.
Thank you so much, Alex.
That brings us to the end of this edition of Moneywise. It's been an absolute pleasure bringing it to you. Do stay tuned. We've got lots lined up for you on NDTV Profit.